What signals or indicators will tell us that capital is becoming more accessible again for the hotel sector?
First and foremost, I think it's going to be drop of interest rate. We've all been looking for that, waiting for that, anticipating that was going to happen kind of earlier in 25. Interest rates have been stubbornly, consistently high and haven't pulled down. So we're really looking for the Fed to reduce interest rates. As soon as you start seeing that, we have seen some reduction in the spreads, which has helped a little bit of health back on the credit side, but it hasn't really helped the equity side. As soon as we start to see some pullback, I think, of interest rates, that's going to be a leading indicator that equity is coming back to the market. Second will be kind of reduction in cap rates. Cap rates also have been consistently kind of in that 8 range that people have been kind of holding on to from an underwriting perspective. As soon as we start to see a little bit more pullback on cap rates and lowering of those, then you'll start to see additional equity coming back in. And then probably lastly is a little bit of regional banks and some of the smaller lenders starting to come back, and that'll be, I think, create a little bit more frothiness where that'll bring capital back in and people feeling with certainty that there's more activity and a little bit more steadiness in the markets.
I think it already is. I think the capital is readily available for the hotel sector, particularly on existing assets that people are looking to refi. It is, you know, if you have a project, regardless of cash flow, there's somebody out there that is willing to finance it. You just have to be, you know, have your strict business plan and have all of your information extremely tight and know where to go for that capital. But I think we're already seeing a lot of signs that capital is readily available, whether it's construction, value add, or just refinancing. There's a lot of players out there that are willing to finance it right now.
I think one of the main signals is going to be what's happened in the political environment as it relates to just stability and direction that we're going as a country as it relates to tariffs and economic relations with other countries. The capital markets like a little bit more stability and certainty. I think that's going to be one indicator. So once the construction financing, the banks have been on the sideline for the last couple of years. Construction costs are a lot higher. So once you start to see banks coming back into that space, I think that's going to be an indicator. Velocity as relates to transactions. In 2024, the last time we did an acquisition, the markets just, it was just inactive for the most part, year over year from a standpoint of transactions. So once you start to see transactions build up again, I think that's going to be a strong indicator that the markets are starting to loosen up again.
I think certainty. I think uncertainty is what has a problem with capital. However, I think there's plenty of capital out there right now, and I think we're getting more certain in our future at the moment. I do think interest rates are going to come down. I think they'll come down with certainty, but there's plenty of capital out there right now. There's lots of debt, thankfully, to all the debt funds that are out there, but there's plenty of capital. My advice, of course, is to call a nice broker, a nice intermediary. There's good variability and optionality out there. Help someone set your book up together so that you present yourself properly to the lender. And I always say this, match the loan with the borrower and the project. What do I mean by that? Don't do a permanent financing if you're gonna sell a hotel in 2 years. And then it depends. Is your hotel cash flowing? If it's cash flowing really well, go CMBS, non-recourse. That stuff's getting really cheap at the moment. If you don't mind signing personal recourse, bank debt is very available and very cheap at the moment, in my opinion, and all those rates are coming down. If you're like a lot of people today and you don't have cash flowing asset or you have a big renovation coming, the private debt funds are a really nice place. Yes, they're more expensive, but they give great loan to value and they'll give you a loan. Shop around, find the right one, find the right terms in all of that. And they're typically 3-1-1 with, you know, at least you get the loan. So I think that stuff matters. But I think the future is bright. I think we're at the bottom of where we've been. I think we're bouncing along the bottom, and I think the macro economy is coming back. I think the hotel industry is gonna come back. I think 2026 is gonna be a really good year. 27, 28, we're on the cusp of a nice run for the hotel industry. I know it doesn't sound that way because there's a lot of sort of pain out there right now. We get that, we hear that a lot, but I think the future is really bright.
At IHG, as a global franchise and management company, we're constantly monitoring economic indicators out there and how it impacts our business as well as our owners and our guests. At this moment, we feel really pretty optimistic about the underlying resilience and health of the economy. Resilience, if you think back over the last couple of years, we staved off high inflation with the Fed successfully executing a soft landing. And since then, the underlying economic indicators around job growth, wage growth, continued low unemployment, and GDP growth, really supported by businesses and consumers, continues to be strong. And so I think that's the solid foundation that we have today. And as I think about capital really coming back into our industry, I'm focused on monetary policy. As we think about the Fed and their decisions around monetary policy and interest rates, they're trying to balance that sort of dual mandate of employment and price stability. Well, employment's in a great situation. So ultimately, what we're really focused on is the impact of inflation and what's that going to mean for interest rates. How quickly are we as business leaders and how quickly are the leaders in the Fed going to be comfortable that we're on that trajectory towards 2%? And really starting that rate cutting activity. In the short term, we'll be monitoring the comments that they make within those meetings, really sort of alluding to when will those rate cuts come. And then ultimately, we do believe they will come. And I think that will be a great way to unlock sort of a lower cost of capital for our owner and development partners. And ultimately, what we'll see out of that is more rooms under construction. If you look at our industry today, there's about 140,000 rooms under construction within the US hotel space. That's been relatively flat over the last couple of years, but down from 240,000 in 2019. So I look forward to monitoring that and seeing great, meaningful acceleration as a sign of renewed confidence in the industry and capital flowing in.